Namaskar, this is Akhilesh Bhargava. Welcome to Tidbits on Business and Finance with me. The 3-day meeting of the Monetary Policy Committee of the Reserve Bank of India is on and is expected to conclude tomorrow. One of the routine items on the agenda of the MPC has been interest rate fixation, but a non-routine item, a special item according to us, is to do with restructuring of bank loans. The Reserve Bank of India needs to come up with some kind of a circular or regulation permitting the restructuring of bank loans, and that's the need of the hour. This item was on the agenda of the MPC even in its last meeting, but in its wisdom, in its last meeting, the MPC decided to skirt the issue. They did not take any decision and they preferred what is called a wait and watch approach. It is now time for the Reserve Bank of India to announce its stand on restructuring of bank loans. And why is such an option? Why is such a move needed? The fact is that the pandemic, the lockdown, the close down have caused havoc on the economy. And because of that, entities have seen that their businesses have disappeared or they have depleted considerably. Cash flows are missing and survival of enterprises is at stake. And in this process, all have been affected. Every sector of the economy has been affected by the pandemic and the lockdown. And with cash flows depleting, as we said, servicing of debt, repayment of bank loans is becoming a big challenge. Once the moratorium is lifted, huge defaults in repayment of bank loans is expected, and that is going to shake up the entire banking and financial system. The best of borrowers, according to us, need handholding at these times of hardship, and it is one such moment where if action is not suitably taken, then the health of the lender as well as the borrower is at stake, and that demands restructuring of bank loans. Reserve Bank needs to take a decision. This kind of a demand for restructuring of bank loans has been coming from borrowers since quite some time. The Finance Minister also said that the Finance Ministry has been in active talks with the Reserve Bank of India in order to come out with a circular on restructuring of bank loans. SBI economists say that a sector-specific approach is needed and restructuring of bank loans is needed. On the other hand, SOCHAM, the Industry Association, says that the impact of the pandemic is widely seen. Enough evidence is there to see that its effect has been widespread and that everyone needs a restructuring. It cannot be just sector-specific. The economists of the SBI even say that the lockdown has been unplanned and unintelligible, and that is their justification further for a sector-specific restructuring to be announced. There is enough evidence which says that defaults in the banking system are going to be rampant and extensive once the moratorium is lifted. There are enough reasons to think so. In its recent financial stability report, the Reserve Bank of India very clearly says that NPAs in the system will go up by almost 50% from now to the 31st of March 2021. The RBI report even says that in FY20, the downgrades of corporate ratings numbered 4,300, whereas in the previous year, in March 2019, they were just 2,000. In other words, the financial health of corporates has been deteriorating. That is further reflected in the fact that almost 50 to 60% of borrowers have chosen to opt for the moratorium option and are now waiting and watching. While this is happening, the system's situation is further evident from the fact that banks are risk averse. They are not lending, they are not willing to lend, and they have preferred to park their money over 8 lakh crores with the Reserve Bank of India instead of giving it to the borrowers. While we witness this, the fact is that the economy is contracting, and all that means that the ability to service loans has got depleted considerably, and a restructuring option will have to be announced. What is this restructuring option and what do we mean by it? Typically in a restructuring, whenever a borrower defaults and he is found to be viable, additional time is given to the borrower in order to repay his loans. His repayment is rescheduled and is now matched with his changed cash flow scenario. That is what we need in this case also. We need to restructure the loans of borrowers such that their repayment is now in tandem with the emerging economic scenario post the lockdown being lifted. And if that is not done, defaults in the system are going to be huge, and so will be the NPAs.